In this video, we are going to talk about 5 ways how to become financial independent. So before starting, please like this video and subscribe to this channel for our future updates. Financial independence is a desire for many. With adequate savings, investments, and cash on hand, you can afford your family's lifestyle and build a nest egg that will allow you to retire or pursue your passion without regard for a yearly wage. Sadly, far too many fail. They are plagued by growing debt, financial emergencies, reckless spending, and other roadblocks. Unexpected occurrences like hurricanes, earthquakes, or pandemics throw preparations into turmoil and uncover previously hidden safety net holes. The Indonesians have been independent for 76 years, but how about you? Is it anything you did today? Financial freedom means being able to meet your needs without worry. The good news is that financial independence does not require a multimillionaire. After the 2008 financial crisis, many people believed they would never be able to achieve true financial independence, the ability to live debt-free off of savings and assets. People who are willing to plan and change their spending, saving, and investing habits over time can achieve financial independence. Here are 5 ways how to become financial independent. So let's start. Number 5. Set your budget and finance priority. We should set objectives for everything we undertake in order to avoid deviating from our initial ideas. The same can be said for your financial situation. Goals will assist you in establishing a budget and prioritizing financial matters. Consider the following question: what do you want to be in the future? Who knows, it could be someone who already has a home and a car, or someone who is willing to go around the world. To begin, keep track of your daily costs as well as any unexpected expenses that occur over the course of a month. You will be able to see which expenses need to be cut or eliminated in this manner. Formalize a database including all of your financial priorities in order to determine which ones are required to be completed immediately, and which ones can be postponed until later. Number 4. Always have an emergency fund ready. The goal of financial independence now necessitates the preparation for a future that is equally free of restrictions. This implies being able to meet all of your requirements, whether they are anticipated or not. This is why it's important to have an emergency money set aside. An emergency fund is a savings account that is used for unexpected expenses such as medical bills, house renovations, auto repairs, damaged electronic devices, and so on. Although you may be comfortable with your current salary, no one can promise your future earnings. Think of your emergency fund as a lifeboat on a cruise ship, ready to be used at any time. Make sure you have enough money in your emergency fund to cover 6 months' worth of costs. As a result, start saving your salary and putting it into an emergency fund so that you can be at ease and attain financial independence as soon as possible. Number 3. Don't change items too often. We are frequently enticed to purchase new items when we see influencers or acquaintances wearing them when we do not require them. Understanding your financial situation is one of the financial advice that can help you become financially independent. Don't be enticed to live a lifestyle that is beyond your financial means. Although expensive items are desirable, alternative less expensive options can still meet your needs. It's advisable not to acquire a new gadget if the old one is still working correctly, especially when it comes to electronics. Use what you have now to the best of your ability, based on their values. It is time to replace it with a new one if it is damaged, broken, or no longer assists you in being productive. Number 2. Track your spending. It is critical to comprehend the methods and justifications for your daily and monthly expenditures. Make every effort to make your monthly spending as low as possible. Utilizing sophisticated software that can automatically compute your monthly budget and expenditure categories is highly recommended by us. If you do not wish to download and install extra apps, you can rely on the information from your credit card statement. Some financial institutions allow you to view schematics of your expenditure that are sorted into different categories. The following categories may be included: food, pets, books and literature, rents, utilities, automobiles, hobbies, healthcare and medicine, insurance, and additional categories. Number 1. Press consumptive money. It is acceptable to have debts as long as they do not accumulate and become a financial burden. You should keep an eye on your consumption debt if you want to be financially independent in the long run. Consumptive debt is debt that is used to purchase goods or services that cannot be resold or reinvested in order to generate further income. It is important to note that having consumptive debt is not a bad thing. In fact, it is highly encouraged if you want to purchase expensive products without causing your cash flow to get stale. However, make a point of paying off your obligations on a regular basis so that your income is not solely used to pay off your debts. There are a variety of approaches you can use to manage your funds sensibly. They may appear simple on paper, but if you attempt to complete them all at the same time, they might get complicated. What do you think of our video? Let me know in the comments section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.